Hello, everyone, and welcome to Digital Lenders Trends and Prediction Panel, hosted by Canadian Lenders Association. Today, Jeffrey Ward will take us through a panel discussion with our wonderful panelists, and then we will be accepting questions live. So please submit your questions at any time throughout the discussion, and hopefully we'll be able to answer them at the end. And as always, this panel is being recorded, so we will email out you a recording of this panel afterwards. So without further ado, I'll hand it off to you, Jeffrey.
Fantastic. Thank you very much, Daniela. Today, we are welcome to have the ability to talk about digital lending trends and predictions with a really cool, unique audience that we have, our group of panelists with me today. I'm honored to have these people that are very passionate about what they do. They're very focused and intentional about their products, their clients, and the value proposition that they offer. So we're honored to be here. We're honored to talk to them, and we're honored to share their perspective with you. We welcome any questions that you have as we go. So please feel free to answer questions or ask questions as we go. First up, we have Do Finance. We have the CEO. Her name is Jenna Tizon. Jenna, how are you doing today? Tell us a little bit about yourself and your company.
Hi, good afternoon, and thanks for having me here today. I'm Jenna Tuzon, founder of Do Finance Inc., based here in Toronto. Do Finance is an alternative lending company serving small to medium-sized businesses in the elective care and aesthetic spaces. We, in partnership with these clinics, provide their clients month-to-month payment plans with small loans payable within 6 up to a maximum of 36 months.
Mm-hmm. Fantastic. And so how did you get into this space? What brought you here?
Well, we designed our lending products in this space because there's a very exciting demand for the services in this industries by the modern consumers. And the likelihood of repeat purchases within a short period of time is high here versus financing a one-time big ticket item at a furniture store, for example. So we do recognize the constant demand for just about any beauty-related services and products. So there's a huge opportunity there. Another important point is that we also had to consider how saturated this market is already with other lenders. And at least here in Ontario, there are really only about 3 major players in the field. So, hey, we thought that we can, capture even just a small market share of the space. Having said all that, the business is really, our mission is to really cater to consumers who are looking to avail of these products, but may need a little bit more of, boost on their buying power to match the high costs. So, we like our merchants to confidently offer their premium services to their clients, knowing that now they have more payment options.
Mm-hmm. So your value proposition would be, financing options, but also customer service, customer experience through your organization.
Absolutely, yes.
Very cool. Why should a small lending company like yourself, like Do Finance, choose to invest in a digital lending platform like Turnkey Lender? What has been the value proposition that you found there?
Okay, so just a bit of a background. So our company concept was conceived in late 2019 by a small team. So our business model was very simple: just lend in the beauty space. We thought, hey, all we need to really do is to check a credit profile, ask for a void check, pay stubs, and just use my experience in the private label credit cards to underwrite, and from there make a loan decision. Can't be that hard to do data entry on an Excel sheet, which we all know is not true. Mm-hmm. So as we progress into really how we like to position ourselves in the industry, we look at the overall dynamics in the lending market, and we realized one thing, and that was really obvious already at that time, wherein fintech is winning. There's no way we can even compete at their level, not even with the old school lenders in our niche, with a simple basic credit report and our Microsoft Excel. So that's when we've really decided to invest on a digital lending platform like Turnkey. The value proposition for digitization in lending are vast. That omni-channel platform really results to a much more efficient and effective experience for ourselves with the ease of the processing of our loans, and of course for our borrowers and merchants. I mean, in this platform, you simply tweak your underwriting criteria with a toggle switch, and all the other tools need to do your adjudication, including credit bureau, bank verification, integration of their bank accounts. They're all in one platform. So for someone like me who isn't very fluent in the tech side of things, it was very important for me to partner with a company who was willing to guide us from day one. So Turnkey, they're doing that. They're doing all of that for our young company. They taught us the technology aspects in lending, introducing us to the world of the Flinks and the Zoom rails and what vendors to use to engage the clients completely online.
That's fantastic. As a sales executive for Turnkey Lender, I get a lot of clients that are in any stage of business, right? We get startups, we get people that have had some success and want to scale, and then we get these large enterprises. And you're right, the fintech space is very hot right now and is providing what we could argue is a unique perspective on customer experience, right? I always advise people, and you probably did this yourself, you've had this experience where you came up with the concept, right? You conceived it, you launched it in 2019, you were like, we're going to take over the world. You built out these clients, you built out these best practices, and then you were like, wow, this manual lending it's there, but it's very, very tedious. Yes. So I would argue that in your partnership with Turnkey Lender, you were able to see scalability, being able to broaden your reach and expand the amount of business you were able to do in a short period of time. Is that a safe assumption?
Yeah, absolutely. And the short answer is as to why we invested on this technology is really survival. The trend is going towards that direction. It's going to stay there longer, and it's only going to continue to become even more advanced than what it is today. For us, we officially started our full operations in the fall of 2020. Well, there's a couple of months of implementation of this product. And fast forward to now, Do Finance has partnered with over 30 SMBs across Ontario, and we're only growing. So, and I'm proud to say our loan is minuscule compared to, everybody here in the audience, but we've got 100% repayment on our loans. And I think a lot of distraction have stemmed from the smart decision to involve technology and AI in our business model from the get-go.
Fantastic. So so you're kind of a conduit, right? You have this relationship with the organizations that are performing these medical procedures, and then you have a relationship with these institutions that are providing you these funds to lend, correct?
So we actually are the funder. So we're funding the consumers who are wanting to have some procedures done,
Gotcha.
And in partnership with these merchants, we disperse the funds directly to our partners, to the clinics.
Gotcha. In that relationship with your funding source, like if that's private money or if that's investment money or institutional money, has Turnkey Lender helped you navigate that borrowing relationship with your funders, or is that something that's kind of private money, investment money for yourselves?
Right now, we're self-funded. So we, from the very beginning, we were either going to do things manually and cut the high costs, or invest and realize the potential of AI and technology in the lending industry. And we have to look at the ROI in spending. It's not a cheap cost, but you have to realize what the ROI is towards the process.
Fantastic. Very interesting.
Mhm.
And to your results, to the experiences you're having 100% repayment. So you've got a good credit policy. You've got good workflow. It sounds like you've got great clients. That sounds
Mhm.
like a success to me.
Actually, yes, a part of it really is the AI and the technology behind what we're using when we're underwriting. Um, we also do subprime loans, so we're not getting the most perfect borrowers out there. So, but by having turnkey and its vendors under one umbrella, we're actually able to see other important things than your traditional data. So we're now getting into more, information on the alternative data. So we can see spending patterns, payment, if they have other payment plan providers in their accounts. So we're able to just look at a borrower more than just their credit score and their debt service ratio. So I think a lot of those have something to do with, the technology that we have. But I also can't discount the fact that these clients or these borrowers have very good relationship with their merchants. So
Fantastic.
there's a psychology behind it that, hey, I want to pay my nurse because I don't want her to mess up my Botox.
Exactly. In the experiences that your customers have, like when they apply for your product, when they apply for the financing you offer, how long do you think that application process takes? And do you see that as a differentiator for yourself?
Absolutely. So I've mentioned earlier, in this space, of course, there's a lot of lenders. There's a lot of much bigger companies more than I am, and there's one that's traditional lending, but they're lending across Canada. So the amount of loan that they have is not even comparable to me. I'm a tiny person, right? And then of course you have the buy now, pay later, which has everybody knows who it is, and they've already tapped into that market. So there you have one lender who's traditional and takes about a day or two to provide a loan decision, and then you have the buy now pay later, which gives you an instant decision within 30 seconds. So where in the spectrum does Do Finance sit? We're pretty much in the middle, because we do subprime loans, but we also do loans with a lower interest rate depending on the credit profile of a borrower. So how we set apart ourselves from the competition is that the first one is slow, the second one is fast, but their underwriting criteria is different from us. So it's always, we actually use the buy now pay later example for clinics who already have it. So we say, look, yes, we already know you have that at your point of sale and you can offer loan within 30 seconds, but they're not going to approve every single person. So where do your clients now sit if in case they get declined? Having me as an option would be a good idea for your clinic to have as well.
Fantastic. And I think you touch on something that's very important, right? And that's kind of the conversion rate. And if they can't get it everywhere, they do have to go somewhere. So
Yes.
having you there, you're definitely fulfilling a very important role, a very important need.
Absolutely. Yes.
Fantastic. Well, thank you so much, Jenna, for the time.
Thank you.
We're honored to have you as a client. We want to do everything we can to support you and watch you grow. And don't forget us when you become famous, please.
Never. Never.
Fantastic. Well, thank you.
Thank you.
Next on our panel, I have Karen Monahan, who is the CEO of Boss Insights. And let me tell you, if you ever get a chance to work with Karen, or if Karen gets you in her sights, she is going to talk to you and talk to you and talk to you until you know her value proposition. So Karen, welcome. How are you today?
I'm great, Jeff. What an introduction. Thank you so much. And
You're
Jenna,
welcome.
so impressive. No
Thank you,
default.
Karen.
I've never heard that before. That's incredible.
It's still very early in the stage, so
Just you hold on to it.
Ask me in 3 months, maybe I'll have a different story.
Very cool.
Yeah.
So
Jeff,
Karen, what do you do? What does Boss Insights do? What do you do?
What does Boss Insights do? We are a data aggregator. So if Turnkey Lender is making it very easy and accessible to established lenders and people entering the lender space to automate that workflow so that the business can get done, what Boss Insights is doing is just taking on the data piece. We will make it possible to automatically get businesses to provide real-time financial information that can flow into an LOS, or it can be uploaded directly to a lender, a bank, a credit union, or a private lender. So it's access to their companies, their customers' financial data in minutes. That's what we do.
Fantastic. So is it like, is it kind of like OCR? Is it kind of like API? Is it kind of like knowing all of the accounting people in the world in Canada and saying, give me this, give me that?
It's the third one. It's mostly it's mostly API. And what we did is we built the global leading number of APIs. The idea is with a single connection, you can get the access to accounting, banking, and commerce data. We will also pull credit bureau data, and we'll also gather other forms of information like tax if you want it. The idea being that you don't have to spend your time chasing businesses for information that is basically as good as a one-time snapshot, when what you need to do is decide whether to lend to them and then to service them. And I know you made a joke about when I'm, when I have you in my sites, but the reason is because I was a commercial banker. So I know firsthand the pain of the customers. And even back then when I was working at RBC, I was always asked, why do you care so much about these businesses? Well, they're all people. So that's the idea. By collaborating, we can solve it for them.
Yeah, and I pick on you, but I appreciate that passion and that intention. I do. So I pick on you, but that's only because we've had five conversations, right, or half a dozen conversations.
That's right.
I myself am a recovering lender, and I remember the process of having to go out and find a borrower, having develop that relationship with that institution or with that company, having to get them to trust me enough to give me their financials, right? The keys to the kingdom, if you will, bringing that documentation back into the office and having a credit analyst analyze it, right? And then looking at ratios and understanding those ratios, and if they were a good business operator or a bad business operator. And I was recovering from a time when we were pre-Great Recession, which was hot and heavy. Let's make a loan to anybody and everybody that exists in the world, to post-Great Recession, having to play cleanup. And unfortunately, there were lenders out there that were very aggressive and not very strategic in how they set their borrowers up long term from a covenant perspective.
Oh, did we lose you, Jeff?
Am I still here?
I saw you talking, but I lost the audio for a minute there. But I got you up until the recession and the covenants, and I mean, you're saying it right. Nobody could say it better, right?
Yeah.
So it's the idea behind automation is really to free up the time of human and strategy and relationship building. So we want to get it to quick no's. And that can really be done by data. There's a lot of information offered instantaneously where you can look at a borrower and say, you know what, we're not the right model for you, and perhaps go to this other lender. And really what Boss Insights is standing for, aside from the automation that we've talked to everyone about for a few years, is that by collaborating, we can serve more businesses, which helps grow our entire sector. That's the idea, because nobody is served by what you just described, and any lender who's actually been through it has some kind of form of PTSD. It's really I was just told that we shouldn't say that business lending is broken, because everything's broken until it gets fixed. But truly, if you are a lender who has experienced this problem, you would not describe it as a train that's working on schedule. And really, there's no reason it has to be this way. The difference between having access to this information and not having access to it as a lender is 1 hour of your time. That's it. You could then see if it will do what we've seen, which is make it 5 times faster. So give it 1 hour to see if it will be 5 times faster.
I like that. That's like a 5-to-1. That's like a 5-to-1 ratio, right?
That's right. It's all in the servicing, because it's not fun when you have the excitement of the deal. It's extra not fun when you get to service that portfolio. And anyone who has been pre some kind of economic recovery and post knows that the rules change, and then you have all the early warning signals, you have all the renewals, and really there is no reason to get a PDF of any kind of financial statement anymore. Wave saw to that. Their accounting software is free, right? So
yeah, you know, I think that that's a really valid point, and I think that you know what COVID has done to us and where the trends are with fintech right now is really pushing the envelope for digital transformation, right? And that's a really broad word, but you touch on something that's really important, right? It at the end of the day, it is about conversion, right? A consumer product conversion, to Jenna's point, should be in a relatively short period of time. But as you go upstream with those credit products, that conversion takes longer because there's more information to analyze, right? And technology gives us the ability to see that in real time, right? So now where I've had company prepared financials, or I've had attorney prepared financials, or audited financials that I'm waiting for as the lender, I have visibility into the movements the company's making, why they're making those movements, and it can put me in a position of understanding my risk on a daily basis, which is critical.
yeah.
And one thing I always thought was interesting, right? If leveraging a tool like yours, if I was an institution and I had Boss Insights, I could arm my lenders with the ability to say, okay, guys, team, however you want to call them, we're going to go after these type of companies. They're going to have this type of profile, and here's how they are looking from a credit perspective.
That's right.
Go. You have no excuses, right? What was really painful when I was a lender is I had no formal credit experience. I just had this attitude. I was hungry like you were, and I was knocking on every freaking door that I could find.
Yeah.
And I would get I would create a relationship. I would get their trust. I'd go back to my credit department and they'd be like, no. And I was like, oh no, now I have to go back to these poor people and say, I can't loan you money, but I might not even be able to loan your kids money. And that's never a fun conversation to have. So
well, yeah, it's just about having access. You know, the lending models, everybody says they have their own unique lending model, and that is true. But also from an information perspective, you're either using traditional data, which is accountant prepared financials, or you're using alternative data, which is the commerce and sales information. There isn't or banking data, right? This is the road. Lending will change. We're at a point in time where things are in flux. So having access to all of it in your fingertips lets you do things like, looks like it's taking you a while to get those invoices paid. Why don't we bump up your operating line? Which lenders couldn't do without this. They had to go into the bank statements, and all the commercial bankers that I work with are now VPs because they had the kahunas and the stamina to stick it out at those banks. And they say, oh, hello. And they say that they are
working. Sorry.
You can be all of our bosses, okay? So they are still saying that they're going into the bank statements of their businesses to see if the businesses are using other providers. And we say, why? Why? If you have the insights in real time, you can actually put the services into financial services. So not only are you speeding up the decisioning and the servicing, but you are also making it easy to cross-sell in real time. And none of this happens without all of us collaborating together. We're all part of this $5 trillion industry, and it's by working together that we solve this so profoundly for businesses.
And on the back end, you just talked about it, servicing, right? How many times as a commercial lender did you have to call Jeff Ward and say, hey, Jeff, covenant time, favorite time of the year. I need some documents. When can I get those documents? And I say, Karen, really? I just gave you those documents. Come on.
That's right. That is right. And it's pitched as a relationship building exercise. To me, a relationship building exercise is when you can solve a problem for a business, when you can actually make a profound difference to them because you know enough about your industry, you know enough about their industry to make that difference for them and get them back to business. Those are the taglines of some of our customers, you know, getting you back to business. That's what it should look like when it's working.
Exactly.
Well.
Exactly. Yeah. And to all of the traditional lenders out there in the world and the non-traditional lenders, having a relationship, to Karen's point, is how do you get them back to business? I'm not getting them back to business if I'm saying, Jeff or Karen, I need your financial statements. You're taking your eyes off of the ball. You're going into your accounting software or calling your CPA and saying, hey, can you get this guy off my back? I'm trying to do something else. So it's a distraction. It's taking you away from getting back to business. I love that. That's awesome.
Yeah. I mean, we saw it in last year, right? No, I don't think anyone thought the decade was going to open the way, well, some people, we've seen some crazy Netflix videos that some people did, but most of us did not think it was going to go down the way it did. And so all that did was catalyze the need for more digitization, for more access to information and workflows, for less getting in person and filling out forms. And the impact of the funding that took place was the difference between businesses staying alive and not staying alive. And we saw lenders who helped their existing clients. We saw lenders who took it one step further. And in the middle of this incredible amount of digitization, what Toby from Shopify called 2030 digitization in 2020, in the middle of that, they took on new clients where they had to do extra KYC work. All of that is possible if you have real-time information and you're willing to work with a partner that doesn't really need to know much about your own lending model, that they can just make it possible to have it. So now that we're in 2021 and we're a year into this new normal, we're really looking forward to seeing what takes place with all the different players that are working together to solve these problems.
Fantastic. Well, I'm honored again and grateful to have you and have this conversation and really appreciate the value proposition that you share with our audience members today. And, I'm a fan. And if you make a t-shirt that says getting you back to business, please send it to me. I'll wear it wherever you want me to. Thank you so much.
Honor to CC Bank, but also Jeff, thank you for everything Turnkey Lender is doing for the industry. It's really amazing.
We're quite honored and happy to help. We want to make that customer experience so much better. Very cool. So next we have Sharpshooter Funding. We have managing partner, Paul Pitcher. Paul, how are you doing today?
I'm good. I'm well. Can everyone hear me okay?
Yes, we can. Yes, we can.
Okay. I'm still using BlackBerries, so it was a little difficult getting back in, but I appreciate the time. Very insightful so far, and I really appreciate the invite.
Very cool. Very cool. Well, I'm a fan of you wanting to stick with Blueberry or BlackBerry. I have one back in the day, and I think it's really cool that there's hope that it comes back, right?
5G coming in about 2 or 3 months. They're coming out with a 5G. It was just announced a couple months ago. So
fantastic. Very cool. So could you give us a brief introduction of what you do as managing partner and what does Sharpshooter Funding do?
Absolutely. So in 2012, I was working for the Washington Wizards and Capitals in Washington, D.C. I'm from Annapolis, Maryland. And I wanted to change. And I started reading, I think it was Entrepreneur Inc. magazine, and it was specifically more towards the effect of small business owners unable to secure 7-figure, 6-figure, even $10,000, $20,000. It was just out of the picture unless you had perfect financials for 3 or 4 years, along with some bank connects. So there was a new unsecured financing program or programs that were being put together. And I started as a broker, First Down Funding in 2012, worked my way into syndicate deals in 2014, and started funding my own deals in 2015 in the States. The reason I roll up my sleeves every day is because I'm dealing with business owners that literally roll up their sleeves every day. And they're working class, working men, working women, and they're looking for some type of help. As far as the process of what we do in Canada, I got into the industry because there were some things going on in the States, along with having the ability to get into another country, which I always wanted to be able to work in several different countries. That was one of my goals. But getting into Canada was almost by accident. We do probably 8 or 9 different types of marketing and digital advertising. And I told one of my advertisers, this was June 6, 2015, I want to cover all the way from Bangor, Maine, all the way to the last block in Miami, Florida. And he took that literally and he started marketing towards the whole North America. So I was getting postal codes and SIN numbers and provinces I'd never even heard of, more specifically Southern Ontario, Nova Scotia, New Brunswick. And I was all of a sudden eyes wide open. I didn't understand that the demand in the States was even higher than it was in Canada. Now, remember, this is 2015. So I kind of jumped into it as a broker. There was a company who actually was starting almost exactly at my time, Jeff Middleman with Thinking Capital. And he had a product that to me almost made too much sense. Their pricing and their structure was very similar to bank pricing, but it was unsecured. So I jumped into full feet. I figured to myself, if I can make this happen in the States, I can slowly transfer this same knowledge and figure out even a better way to do this in Canada. As far as where I'm at now, there are specific problems with what we were dealing with over the last year. I can say from March till about October, our industry was almost crickets. It was almost to the point where we didn't know if really it was going to be a future in 2021. But long story short, there's a very small niche that I try to fix in on, and it's business owners that literally just got their domain registered 6 months ago, and they just got their first truck, and they're finally getting their first contract. But big bank X or credit union Y, they can't even get a phone call, let alone an advance for maybe $20,000 or $30,000. So same thing in the States. I try to focus on those business owners that have the ability to become BDC fundable and bank financing, but they need some type of history. They need it now. They can't wait 60 days, 90 days. So it's a combination of being able to help someone in the beginning, just like when I needed help, and obviously getting them to a point that they can get that secured or even unsecured financing through some type of bank or BDC product. So that's where I'm at with Canada. Overall, there's a certain type of, I guess you could say, feeling you have when you actually can help someone, whether it's today, tomorrow, or over the next couple weeks, because these people and these business owners, they rely on companies like myself, companies like Avi. I mean, Avi, I can't speak anything negative about him. They only do great things as far as the speed, the efficiency, and the amount of financing that they can secure in such little time. I'm just 1% of 1% of that, and I'm fine with that. But aside from the future, there's a ton of information that can be gained through, technology and different programs. I like using the old school methods, and we've done it in the States since day one. A couple trade references, a couple verifications outside of actually talking to the owner. You can get a huge story written in a couple seconds about whether this person or whether this business owner is going to play ball. That's kind of been my route over the last 6 years. It may work for me. I don't think it works for a lot of other people, which is why I think it works for Sharpshooter Funding, because we do things a little different. Also, the fact that I work 7 days a week, not because I have to, but I actually enjoy it. And there are a lot of benefits to what we do, and making sure it's understood from the very beginning. Because when someone signs, I don't know if this is an issue on anyone else's end, but when someone signs or off on something too fast, that creates, in my opinion, it creates long-term issues. I almost over-explain things because I want to make sure that they understand it, and that they are asking questions, because this isn't charity, and there is a cost to the working capital. But when it comes down to it, helping people every day is what I try to do, and I'm proud to be able to work in another country, and I enjoy being in Canada right now. So
fantastic. But your enthusiasm for your clients and knowing their needs and the service that you offer them is radiating. I think it's really, really cool. I think it's very unique, and I think you make a valid point that you can rush into something that you don't know the ramifications of rushing into that, right? I had a dear friend of mine's father tell me the other day that, you can get married quickly. Getting out of that marriage can be costly, very difficult and costly. Yes, exactly. Yeah. So approach it carefully. One of the things that I experienced as a lender, and I think that you do this well, is I was like, I'm a banker. This is cool. Everybody's going to like me. I can give away money, right? Now you have to repay that, and there's some conditions you have to live within, but I can give money to anybody. And what I didn't understand was that the institution I've represented, like a certain type of money or a certain type of business or a certain type of borrower. And so that put me as a hungry lender out there knocking on every door and having to go back and say, well, you know, it's been nice to know you. I could help you and maybe introducing you to other people that are in the service industry, but I can't really help you. And so I think small businesses don't really understand that concept. You know, they think I've started this business, I've got my charter, I've got my LLC, I've got my first receivable, I'm on my way. Mr. Bank opened the door, and 9 times out of 10, they're met with no type of communication or no type of real strategy or encouragement to get them to that funding situation. So I think that you kind of surmised how you approach that business for those people and really giving them a leg up in the market to someday be, you know, a credit-worthy bank borrower. Does that make sense?
100%. The reason my feet are right here in Newmarket, Ontario right now are because of that. 90% of the clients that we bring in are because, and I learned this early on, someone else said no. And from 2012 to 2014, my job in my mind was to figure out why these funders and lenders are saying yes and why they're saying no. And 90% of the time when a no was the answer, there was never a real explanation about that. And I'm thinking to myself, I'm reading these bank statements, these P&Ls, these balance sheets myself in the States. And I'm thinking to myself, this is fundable. This is a valued business owner. Maybe his credit 4 years ago was banged up, but look at what he's done over 15 months. Yeah. So the reason I'm even here today is because of that. And I can't tell you that there's even a more of an issue with that now because of COVID. And I'll be happy to take applications and try to review files, because I know for a fact that a lot of these people that go to the banks, 90% of the time, they're going to get a no. I would say right now, 50% of the time, they're still going to get a no. But I'll be glad to review and try to work something out for them to at least get them to the next stage or get them to the next month and the next quarter and hopefully the next year. Yeah.
Fantastic. Well, I'm sure your clients appreciate your service and appreciate your relationship and what you do for them. That's awesome.
I appreciate that. Yeah, they do. They, a lot of them, you know, they take exactly what they can afford. Okay. And you do have to make sure that they're using it for this specific reason. Over the phone, verifications can only go so far, but I mean, there's a car wash store right here. Well, it's actually down in Houston, Texas. And Houston and Texas right now is a scary place to fund it. Actually, I think you're in Texas, aren't you?
Yeah, I'm in Austin, Texas. Yes.
Okay. He owns 3 car washes. I mean, 2 of them are doing great. One of them, not so much. But all 3 locations are open 7 days a week, which is obviously a great thing to see. So those lockdowns, we kind of separated ourselves in the States. Same thing in Canada. We had to. It was either, you know, figure out a way to make this work, or you might be doing something else next year. But I do enjoy what I do, and I do enjoy the Canadian market. So
fantastic. Well, Paul, it was a pleasure. Again, everybody that's on this panel is bringing this wonderful energy that I appreciate, this passion for the industry. So thank you so much. And Avi, you're up next. So are you ready for us?
He's a busy man.
He's a busy man.
He's a busy man.
I noticed that he had a little assistant that was there. She may be requiring him to make her a peanut butter and jelly right this second.
That's exactly what it is. Yeah.
Kudos for doing that. I have kids under my roof as well, and I'm in a constant fight with their grandmother to see who can make the best peanut butter and jelly sandwich.
I still eat those.
What I'm told is that I have to cut the crust off to even compare to grandma. And I'm like, I ain't cutting the crust off. Sorry. So Avi, tell us about yourself. What do you do at 2M7? I mean, I know you already have Paul on the payroll because he's given you major props, but what do you do?
Okay, well, no, Paul's not on the payroll. His props are honest. So we finance small businesses across Canada. I'm doing it since full force, I'd say since about 2016. And when I say small businesses, you know, it's everything from, trucking companies to commercial cleaners to restaurants and florists and cleaners and whatnot. So pretty much all small businesses across the country. We like to call it opportunity financing. So, when a business needs money or they have an opportunity available for them, maybe it's a bulk order, maybe hire some new personnel, buy more equipment, upgrade their website, whatever it is, there's always going to be a cost associated with that. And I would say majority of the time, these small businesses won't necessarily have the cash to capitalize on that opportunity. And that's where we come in a big way. We pride ourselves on our speed of funding. We try keeping it under 24 hours from application to funded. And so to really give these businesses an opportunity to really cash in on the opportunity that presents itself, and to really, help them grow their business. A lot of times, they might have been rejected by the bank, or maybe not, but the bank's going to take, 3-4 weeks to do a review and then decide, and they don't have that time. Right? We all know generally the time to raise money is before you need it. But most people don't get around to that, especially, living the day-to-day grind and running and growing a business. That's something a lot of, entrepreneurs and business owners don't necessarily focus on sufficiently in advance. And then when the opportunity comes knocking. So we saw there was a big gap in the market in terms of timing of funding, in terms of businesses that were eligible, like Paul was saying. A lot of these businesses, they might be good businesses, but banks, especially here in Canada, where we're dominated by the big five, have very specific requirements. Pretty much all banks have the same requirements. You get approved by one, you get approved by all, rejected by one, rejected by all, more or less. So, anybody that doesn't fit their exact box, haven't been in business long enough or don't have enough collateral or whatever it is, there was kind of a big gap in the market for all these businesses, and that's kind of where we saw our, niche, our opportunity to kick in. And that's what we've been doing. So we've been, financing small businesses. A lot of them it's one time, a lot of them it's repetitive. So that's kind of how we've been operating. We've been growing all the time. Paul gave us a shout out. Appreciate it. Can't say we're at 0% bad debt, but hopefully we'll get there. That's the name of the game.
That's awesome. So from application to funding, 24 hours, that's moving pretty fast in any world. Do you leverage technology to do that, or how do you do that?
Yeah, absolutely. So we invested pretty heavily in our own tech stack. We do a lot of in-house development and kind of building out as needed. So we started off right, like in the beginning when we were just kind of starting to fund. We kind of built it, and then we had to tweak it and tweak it again and rebuild it. And so yeah, we invested pretty heavily in our tech. We built most of it ourselves. Obviously, we have a lot of third-party providers that are better at their niche than building it ourselves. And we kind of add that to our stack. But absolutely, it's very much technologically based. I don't think we could do it manually that quickly for sure. And still have a kind of a good handle and good idea and good understanding of the business we're funding. So it's very much a tech company as much as it is a finance company. And obviously, I mean, the whole world is getting more technologically advanced, if you will. All businesses, all industries across the board, more or less, have been moving more and more, and becoming more reliant on their technology and on their software, and on their ability to execute, and speed, obviously, and efficiency, let's call it, is obviously significantly enhanced, with a good tech stack. And once your software and data is lined up, and obviously, as some of the earlier panelists mentioned, having good AI and being able to use the data you're collecting, and learn from that data to improve your underwriting, and improve your sales process and improve your collections process, and really to build on the data that you have, in all kind of parts of the lending or funding business. That obviously gives you a big advantage in terms of speed, in terms of bad debt, in terms of your underwriting ability, in terms of businesses you're able to fund, in terms of building out your credit box, either tightening it in some ways and widening it in others, right? Like, so as important as it is to not have bad debt, it's also as important or more important to not be turning away good customers or potentially good customers or customers that, you know, that are fundable and would pay back. And that's why it's so important to have the data lined up properly and really collect as many data points as possible, and really kind of determine what's relevant and what's not over a long period of time and over a significant number of loans and deals and financing. So you really get a good feel for which just because a merchant, let's just say, has a bad credit score, if you collected enough credit scores and really break down each credit score, you might find out that the number itself is a lot less relevant than why it's bad or anything like that, right? So the more data you have, the deeper you understand it, the better you can use your own data or data you get from elsewhere, the better understanding you'll have of your customer, the better understanding you'll have of your own risk tolerance, and the better, you can present that when raising capital or, training new underwriting or marketing to new clients, right? So it's really the key to kind of all aspects of the business is have a good understanding of your customer and good understanding of the data points you want to collect and you're comfortable with.
Yep. So, I'm curious, and Paul, you could answer this, Jenna, you could answer this, and Avi, you could answer this. How would your clients find you today? Do you have an online presence? Do you also have kind of a referral network presence on how potential borrowers could find you today?
Yeah, so let me just jump in on that. So we do online. We obviously spend a lot of money on marketing. We have a lot of brokers, referral networks, right? So, if various, referral partners or other people that would work with the businesses and are aware that they need financing might refer the business to us. We do have a pretty big online presence. And yeah, I mean, all sorts of marketing channels, radio, TV, yeah, do a little bit of everything.
Very cool. Have you seen, like with the pandemic times, have you seen an increase in fraud during the pandemic, or have you seen that that's kind of always been at a level it's been, or have you seen any spikes in that?
So we've seen a small, kind of when everything got crazy in the beginning of March last year, we kind of saw not just fraud drop off, but everything drop off. The government was giving everybody free money and nobody wanted to take on any new debt because nobody knew if they'd be able to repay it down the line. And so there was really very little activity at all. But as soon as the market started coming back in, May, June, we saw a huge spike in fraud, in fraudulent applications, but that only lasted for about a month or two and then it was gone. So I don't know if it was all the free money from the government that made all the fraudsters just think it was a good time, or I don't know what it was. But then it just kind of dropped off and went back to the normal levels, maybe even a slight decrease. Yeah, which is kind of interesting. I don't know why that happened, but yeah, that was just an interesting thing that we saw.
We deploy a tool, and the reason I asked that question about fraud is one of our attendees had asked, have you seen fraud and during the pandemic, and are there any tools that you use to protect against fraud? We have a tool within Turnkey Lender that gives us the ability to look at where that a borrower applied from. So if I was in Austin, Texas, and I was applying for a loan from a lender in Austin, Texas, you could see if I was based upon my URL and my location, if I was actually in Austin, Texas, or if I was in Timbuktu, and just having that experience, being able to look at and understand at the very beginning if that's kind of a fraudulent application. We also look at crazy things like, and I'll let you go, Karen, I know you want to add in, I see that, but I'll let you go. We also look at things like how they fill out the application. which you would never think about, but do they start and stop the application? Do they copy and paste the application? Does somebody start keying it in and then somebody else starts keying it in with heavier fingers? So looking at weird stuff, I think that's what's cool about technology today, and it gives you the ability to leverage non-traditional credit scoring to really understand that behavior. I think Plaid is a cool experience to go in and see, real-time deposits in your bank account, see debit and credit behaviors, and very quickly validate, hey, Jeff Ward says he's got this much in his bank account. Hey, Jeff Ward seems to be having these type of debit behaviors, these type of credit behaviors. So I think that's kind of cool. Go ahead, Karen. I know you want to jump up and ask something or say something.
Well, I can never jump on anything again after this panel. No, the fraud question is such an interesting one, because a lot of what you talked about with the application starting and stopping, we did see a large increase. And there are certain things you can do, like confirming that the information has not been altered from source, which we put in place, but also, especially when it came to COVID funding, people would just do some strange things when it came to the maximum amount of loan request versus the maximum amount in revenue, which was pretty shocking because it's very easy to tell if that's going to happen. So there was some strange fraud behavior that came out of 2020 that wasn't there before. I don't know if you saw the same thing, but we noticed that. So we put a lot of fail safes in place. And there was something else going on during 2020 that it's not fraud, but it's just the speed and the distress led to a sort of urgency that we'd never seen before from borrowers. And the expectation on the flip side that borrowers would be able to, especially the small and medium businesses that maybe don't know if they're a sole proprietor, they have 100% of all the shares because they're just running a business. They're not thinking about share structure. So there was a lot of things that we had to add in to the portal that weren't there before. Did you notice the same thing on your end?
Yeah, we have a brilliant marketing team at Turnkey Lender, and are blessed because of that. So we get all kinds of really cool leads. And what I've witnessed, in the leads that we were getting was that there was a lot of pandemonium and a lot of concern about funding sources. And in our name as Turnkey Lender, there was sometimes the assumption made that not only are we an LOS and an LMS, but we are also the funding source as well. So we would get a lot of calls that would say, you know what, we don't care about your technology, we need a loan. And there was a lot of that out there, and it was just all this hype and this scare around the pandemic, right? That was just a lot of just pent up anxiety. So if there are any questions from our attendees, please feel free to raise your hand or ask your questions now. I greatly appreciate every panelist that we've had today. Great stories, great passion. Really like what you're doing for the fintech space, and supportive of the small business that is out there that is in need of your products and your services. It's a wonderful time to be representing and pushing digital transformation, with all the passion that we share.
Definitely, it's a very exciting time to actually involve a business with the whole AI and the technology. And for me, being very new to the industry, in the beginning we thought like, hey, it's just another tech company, whatever. But the moment you actually divulge more into it, you get to learn you get to understand the brains of these smart people. Like, how can you even come up with a turnkey, like with one platform? How can you even come up with a Flinks or a Zoom Rails? Like, it's just fascinating. And it's not something that I 12 years ago who would even think that I'll be here in this position. So definitely a very exciting time.
Fantastic, fantastic. Well, to our attendees, thank you very much. Daniela, if you have anything that you want to add, please do. And it's been an honor and a privilege to be able to sponsor this with the Canadian Lending Association. Thank you so much.
Yeah, thank you so much, everyone. I just want to shout out our wonderful panelists and Jeff for your incredible insight. Thank you so much. And thank you for everyone who tuned in and joined us today. We will be emailing out a recording of this session. So don't worry if you miss something, you will be able to watch it again. And absolutely, please join us for upcoming events. You can find them at canadianlenders.org. So thank you, everyone, and have a great rest of your day.
Thank
Have
you
a great
very
day.
much.
Thank you.
Be well.
Bye-bye.